we had made last time was, what is the purpose why SEBI exists? What is the reason why we exist? And we had said that our single most important purpose is capital formation, because if we do not facilitate capital formation in the economy, then we have not done what we have been set up to do. There are many factors which impact capital formation, but certainly one of the important things that is within the control of SEBI is to process applications in a speedy manner and give approvals or rejections in a speedy manner, leaving no room for delays or indeed for any malpractice within the regulatory environment. Happy to share with you some data. You'll see 4 charts there. The first and most important reform we made in SEBI was, while technically every regulator counts pendency from this date of last receipt of all information, which gives every regulatory officer an escape hatch, that if they are about to cross their target timeline, they simply ask one more question. Right? This loophole has been plugged, and the data that you now see before you is the aging of applications from the date of first receipt. So no excuses, no sending last-minute questions. This is how it stacks up from the date of first receipt. You will notice that pendency goes up and down, which is not a bad thing. So for instance, if today, October 31st, we're seeing the data, equity fundraising, pendency is going up, that's a good thing. It means there are more applications, there are more people wanting to raise capital. So pendency in itself is not a bad thing. In fact, it is a good thing. The bad thing is aging. And so within SEBI now, if the department is within the green or within the yellow, which means less than 1 month or 1 to 3 months from first receipt of application, they're doing okay. The minute they go into the blue and the gray, and you can imagine why I've set it as gray within the organization, the minute it spills over there, every officer in SEBI knows that they are accountable to answer to the chair as to why they are in the gray zone. So as an example, yesterday I took stock, equity fundraising. Why are these 3 applications sitting there, and what are we doing about it? Why are they still sitting there? And I was very happy to see that on the spot, this was about 9:30 or 10 in the evening, and I was on the phone call asking the officer, why do you have 3 items which are more than 6 months? One is sub judice, so there's judicial intervention, we cannot do anything. And in 2 cases, it is awaiting some other regulator's approval. So again, we cannot do anything about it. So as you can imagine, the focus that we have on pendency and aging is because of the commitment that we made to each one of you here 1 year ago, that to us we understand that in the markets, time is money, money is time, and any delay on the part of the regulator causes huge, not just inconvenience, but actual cost to the market participants, particularly to the issuers. So as you can see, we're doing a reasonably good job from pendency and aging, not pendency, but from aging, which was pretty much, significant numbers in the blue and gray zone. We've now come down quite a lot. In the case of mutual fund schemes, oh, wonderful, less than 1 month, so I presume that they are not complaining. So what it really means is that you basically put in an application, and before you know it, SEBI has approved it because it's not even there as a pendency. So the important thing is every part of the ecosystem needs to have the ability to respond instantly to the market and to the investor needs without the regulator coming in the way. So this is our commitment that we wouldn't come in the way, and this is our progress report. Similarly, on AIF schemes, you can see everything is in the green and yellow, and compare that with March of last year, where we had almost 71 items in the blue and gray. And today there is 0. In the case of REITs and InvITs, of course, these are few and far between, but again, you can see that there is very low pendency. Also in terms of pendency of registrations, because it's not just about fundraising, it is about new participants coming into the market. And, you know, in the roundtable that we had earlier this morning, there was a discussion about, is it very onerous to really get things done in SEBI? So this is, again, this was our commitment, and here are the numbers. If you look at AIFs again, you know, registration. This is registration of somebody wanting to carry out this activity. Earlier, there were lots and lots of cases, over 24 cases in the blue and gray. Today, it's down to 0. Mutual funds, down to 0. Portfolio managers, there's one person sitting in 3 to 6 months. Otherwise, all in green and yellows, and so on. So this was our commitment that we made to you, that the regulator will not come in the way of your doing what you need to do in the market. And this was our sort of status report on that. The second thing that we had discussed last time, and it's been mentioned, on numerous occasions today, that SEBI's whole objective and what we bring to the table is to ensure that there is trust in the system. So while we are very, very conscious of the need for having ease of doing business, if there is no trust in the system, there will be no business. If there is no business, there will be no question of ease of doing business. To have the business, you must first have trust in the system. And this was the second commitment that we made. And of course, we had highlighted that the single most important tool that the regulator has for building trust is transparency. And in continuation of that, some of our regulations that had been brought about indeed created a requirement on further transparency in the entire ecosystem. But one thing that we were very conscious of, that because of this balance, and this is the theme of this session today, the balance between ease of doing business and trust and stakeholder protection. What we realized along the way was that nobody has a dispute with the regulator on the need for trust or the need for transparency. Nobody has a dispute with that. The dispute is over how it is to be implemented. In other words, the devil is in the detail. And I can only say that for somebody who implemented SOX compliance, the US requirement, the SOX compliance in a bank, I think at that time we were over $100 billion balance sheet. And I've implemented SOX compliance with my own 2 hands. Nobody is more conscious of this than I am. And I think it was the consciousness of this that nobody disputes the need for trust and transparency, but what is required is to address the detail so that there is ease of compliance. And that is really what, you know, many of the people here have talked about, which led to the creation of the pilot, the first pilot of the Industry Standards Forum. And I must say that at SEBI we are delighted. We are delighted that all 3 logos came together on one letterhead. All 3 associations came together and nominated one chairperson, Mr. Kamath, and they have been working relentlessly on really looking at how to facilitate ease of compliance and how to set up industry standards for implementation of the SEBI regulations, which are easy to comply with and where everybody, it brings clarity and complete transparency. So it's transparency on the other side of the regulation to say that if you follow step A, B, C, D, you are deemed to be in compliance with the regulation and you don't need to keep angsting about interpretation and other things because the industry has set the standard. And in this entire process, I would like to say that FICCI took a very strong leadership role in the entire process of setting up the forum and its operation. So I would really like to appreciate that. Thank you very much. It's absolutely critical. And this is right now on a pilot basis, and based on the success, and the early signs are that it is a good success. If it works for the industry, it certainly works for us, and we would then be in a position to go back to our board and actually, bring a formal framework for the entire concept of the Industry Standards Forum, which is right now being implemented on a pilot basis. I must say that This concept was inspired by the way in which the mutual fund industry and its association works, and we've seen great success in that over the years. And more recently, there was a brokers, an MII's industry standard forum, which also we piloted, and that's also showing extremely good results. So I think that we can all look forward to, in the near future, the Industry Standards Forum becoming a formal part of the regulatory architecture. And this, we believe, will be a crucial step in addressing what is the devil in the detail and ensuring that there is ease of compliance all around, because the reality is nobody disputes the need for trust and the need for transparency. The other commitment we had made last year was that SEBI will eschew dogma and instead be focused on data. And that it will not be a question of your opinion, my opinion, his opinion. It is what the data will say to us. So I'm happy to report that there have been a number of initiatives which I think have broken the mold of what many people thought was a dogma at the end of, at SEBI's end. One of the most often quoted ones is, for instance, permitting private equity to be a sponsor in mutual funds. And it was widely believed that SEBI will never agree to that. We have, and we have implemented it. There was a popular belief that we will never review the delisting regulations, and we will always stay with the reverse book building process. As many of you know, we have a consultation paper that was floated. We have got a lot of feedback, and at the next board meeting, we are taking that proposal to our board. It was widely believed that SEBI is very dogmatic about insider trading and the trading plan. Again, we wanted to break that thought and that dogma. We operate on fundamental principles and on data. And so again, we did a consultation on trading plan reforms. And again, happy to report that we are in the process of reviewing all the public feedback. And at one of the forthcoming, perhaps December, January, one of those board meetings, we would be taking that proposal to our board as well. So all round, our commitment continues to be that we are not wedded to anything. There is no dogma. There is no place for dogma. There is fundamental principles, there is logic, and there is the reliance on data. On the question of data, recently there has been a lot of discussion around ESG metrics. We also have, under the Industry Standards Forum, one of the subgroups is working on that, and we have conveyed to that working group that if there is data, and I believe Ritesh is perhaps providing us with some data soon, that if there is a need for us to modify some part of that regulation because the data supports it, we have said we're absolutely open to it. But at the same time, we have also shared with the industry that even at the time that we brought our regulations on ESG and particularly on core ESG, a full back testing was done. In fact, I remember the committee which was headed by Navneet, they were very frustrated with me because in the first meeting that I attended, I completely made them do a U-turn. The entire working group was focusing on, okay, so we have 800 mandatory parameters for disclosure. We now need to look at some of the 100-odd leadership parameters which we need to make mandatory. And I'm like, are you crazy? I mean, 800 is bad enough. You now want to make another 100 mandatory? I want to go in the reverse direction. I want you to reduce this to 1 dozen. And that was the challenge that I had posed to the committee, saying, what do you need that cannot be captured in 1 dozen parameters? And sure enough, the committee submitted its report, and that was the birth of core ESG or core BRSR, where in place of 800 parameters, there are only 41, and out of those, only 9 or 10, Navneet, are climate-related. And so that was the birth of something which was a simplified version of ESG. And on assurance, again, there was a good plan. It had been formulated by the working group, and they said, we're ready to submit our report. And I said, backtesting kidhar hai? So we rely on data. If we cannot be sure that the policy that we are about to make into law can actually be implemented, I'm sorry, I don't sign. So again, the committee was very frustrated because then it took us about 2.5 months to do the back testing. And the back testing results came, I think about 10 or 12 large corporates and some small-sized corporates had participated in that. And the results of the back testing indeed were that out of all the data that was required for assurance of the core BRSR, 95% was either immediately available or reasonably available within the corporate. And even the 5% that was not and was classified as difficult to get, after some discussion, it was assessed that that number also would be perhaps only 2-3% and not really 5% because some were interpretation issues, which we clarified. So in short, our commitment to data remains. We do not and will not bring regulation into the market that is not backed by data. That was our commitment to you. And as I said, this is the progress that we have, that even if it means that a report is delayed by 2-3 months, even if it means that the regulation is delayed by 2-3 months, we will do the back testing, we will do the data analysis, and only then will we move forward. In all of this, as we have tried and strived to stay true to the principles that we had articulated that they guide us, we are also very conscious that not everything always is as it appears. And that very often what we see is a matter of perspective, right? It's a question of where we stand. It's a question of which angle we're looking at it from. And that works both ways. It's when the regulator looks at what's happening in the market, and it's also the market when they look at our regulations. And so I have a little small video snippet which inspired me to think about what is perspective. Now that looked like an impossible task, right? Let me replay it again. Go back. Okay, so just watch this video carefully. What looks like an impossibility when we look at it from one angle, when you look at it from another angle, it gets fully explained. So this looks impossible, right? The ball is going up. You change your angle of perspective, and you can see that this is not an impossible task. So, in many ways, the Industry Standards Forum was inspired by this thought that perhaps there are many issues which we are blind to. We are seeing it from one perspective, and we need to see it from another perspective. Equally, there are things which the market is not able to see the way that we see it. And so, there are some thoughts I want to share with you on that. There's a common perception that SEBI has been going into overdrive, too much too soon. We'd like to share with you this data. The green cells, the green cells are the number of circulars or the percentage of circulars that we've issued in the last 12 months. This is September to August. A total of 167 circulars that we've issued. Across, of course, this is across all market participants, means exchanges, brokers, mutual funds, AIFs, listed companies. We have mainly about 10 large groups of regulated entities and another 10 smaller set of regulated entities. Across all of them, over the last 1 year, we issued 167 circulars. 43% were either ease of doing business, meaning we made life easier for you, or it was developmental. What do we mean by developmental? So we have a definition. So developmental means we facilitated or permitted a new product or service in the market. Say, for instance, online bond platform. Say, for instance, execution-only platform, right? We're now talking about MSM REITs. So these are new products and services, new categories of investors that we allow a whole new set of people to do something which they up till now were not permitted to do. Okay, this could take the form of either reducing thresholds. So for instance, REITs and WITs bonds, we reduce the thresholds for investors. So you're bringing and developing a new category of investors. New channels to offer those products and services. Again, going back to perhaps the online bond platform or the execution-only platform for mutual funds. So the product is old, but the channel is new. New types of intermediaries and service providers. So the whole setting up of the Limited Purpose Clearing Corporation, the consultation paper on market makers, all of this is something which is new. Of course, each of these new products, new features come with their own frameworks for risk mitigation, but this is all new stuff which has been permitted and facilitated in the market. This is what we classify as developmental. Ease of doing business, of course, is ease of doing business, easy to understand, simpler, fewer processes, flexibility in operations, aise kar lo, waise kar lo, do as you like. Automation of compliances, we've done a lot of work in the area of automated disclosures so that companies don't even have to bother, right? The exchanges or the depositories automatically disclose on their behalf. Shorter timelines to reach business readiness, digitization of reports, and of course, we've received a lot of compliments for our master circulars. So our master circulars now, there's in one place, if you're a particular kind of entity, there is one place that everything is there. And I think some 700 odd or 800 odd circulars have now been made redundant because now there's just this set of master circulars which allows you to just look at one piece of regulation and know that you're in compliance with everything. So with this definition, 43% was developmental or ease of doing business. So almost half, right? Some 6% was extension of timelines, which of course the industry likes, but it's not neither here nor there. And some 2.4% other regulators, and 48% was our own risk mitigation or investor protection circulars. So it's almost half and half. So I think this point, from our perspective, as I said, because very often, the focus is on areas which are, shall I say, more controversial, I think it's easy to miss the fact that, in fact, almost half of everything that SEBI does is for ease of doing business and for development and not for risk protection and greater compliance. Another, focus area is for listed companies. There's been a lot of discussion around whether there's been too much, requirements on listed companies. Again, just to share some data with you. Ever since LODR was notified in 2015, the average number of circulars that we issued for listed companies for ongoing compliance was 6.5. In the last 12 months, we've issued 4, so we're actually below average. And out of these 4, 2 actually provided for ease of doing business. So really, there were only 2 in the whole year, which required compliance. One was the core ESG framework, which, as I was just describing, is actually designed to reduce the burden and to limit the burden of compliance, although it's a new compliance. And the second was the disclosure of material events. So in the entire year, this is the only thing that SEBI added. So just want to share with you again from, when you look at it from our perspective, that while, and this is true, that I've just taken one example for listed companies, but this is actually true for market participant after market participant, that actually, if you look at it as to what is it that's relevant for each stakeholder, it's actually a fairly limited set. And it's not as though, there is this whole mountain of compliances which are suddenly thrust upon the entire system. This we've actually taken the entire piece. So again, to share with you our perspective, what has been happening over the years. So we've taken a longer perspective. So in the early days, 2013 to 15, there was on an average, and they were around that number, 66 circulars in a year. The next 3 years or so, it went up to 100, and after that, it went up to an average of 160. Now, this is not a bad thing. It's like pendency is not a bad thing. The reason for this is that the market over these last 10 years, as you can imagine, each one of you is a market participant. You know to what extent the market has grown, the complexity has increased, the number of participants, the number of products, the number of investors, everything has increased. And therefore, this is really in keeping with lockstep with the development and the evolution of the market, that the regulator also needs to be dynamic, and keep step with the developments of the market, be innovative, permit innovation, and facilitate all of this, which accounts for this steady increase in the number of circulars. But since this is an important piece, we've also given it context that our 160 circulars are across mainly 10 types of regulated entities. There are many more, but mainly 10. In that context, if you look at our fellow regulator in terms of RBI, for that same period, theirs was 200 across mainly, they have mainly 5 types of entities, right? Banks, NBFCs, ARCs, etc. So, from our perspective, this is part of the evolution of the markets and also not out of whack with what is going on around us. Again, with a focus on the last 1 year, pretty much in the same, space, 167, and most importantly, that out of these, 43%, as I repeat, was for ease of doing business and development. However, we've also received a lot of feedback that no, SEBI is in hyperdrive because every third day there's a consultation paper. Even the media tells us, how are we supposed to keep track of all these consultation papers? Okay? And this is what I want to share with you. Look at the data. In the first decade that we've compared, 2003 to 2013, the percentage of consultation by SEBI, meaning for every 100 circulars that we brought out, what was the extent of consultation we did, was only 7%. In the next 9 years, it stepped up to 17%, which means SEBI was consulting more because we thought the markets are complex, we need to consult, we need to make sure we get it right, and it was 17%. In the last 1 year, we're up to 33%. So it's not that we're imposing more regulation on the market. You're getting that feeling, just like in that perception, that ball going up, you're getting that feeling because SEBI is consulting more. So almost 1 out of 3 circulars is going through a public consultation process, which was never the case in the first decade. So this sense and this feeling that whether it is the industry association that has to respond to our public or wants to respond to our consultation papers, or indeed the media or the market participants themselves, if you tell us, we'll not consult. You see, it's only more work for us, right? Because we get literally dozens and dozens, sometimes hundreds of responses, and we read each one of them, analyze each one of them, and present to our board what we are accepting, what we are not accepting, why we are not accepting. So it's a lot of hard work for us to consult. But आप कहते हैं तो ये 33% को वापस 7% ले जा सकते हैं. आप बताएं. But certainly this perception that SEBI is in overdrive, our perspective on it is that you are getting this feeling because of the stepped up level of consultation that we are doing. And this is coming from nothing but a very deep-seated belief in SEBI that the market is today very complex, and we would be doing the wrong thing if we did not consult fully and understand everybody's perspective before we made something into law. We take our responsibility of consultation very, very seriously, and that's the reason for this becoming 33%. In summary, I would only say that the last, I've been with SEBI now for close to 6 years. 6 years has taught me that there is no better way for the market to progress and for the regulator to do its job than to work with the industry in a spirit of partnership, and which is what is embodied not just in our advisory committees, of which we have a very rich history. Right from inception, we've had a very rich history of our advisory committees for regulation formation, but now with the Industry Standards Forum for regulation implementation and standards. And that's the partnership that we believe will actually take India to that path of realizing its huge opportunity today, and more importantly, today, when we attend global, fora like ISCO, etc., we rarely need to refer to global best practices because we have become the benchmark for global best practices. And more often than not, the world is seeking us out to say, we want to know how you did this. So more power to India, more power to our markets, and more power to each one of you. Thank you.
Thank you so much, ma'am. Extremely insightful address. How you've achieved this balance between trust, EODB, transparency, and development.